What is up, XRP community? Welcome back to another video. Thank you for joining me. I want to talk about the interest rate cuts and what to expect. Ripple released their Q2 2024 markets report. Some crazy stories happening on the Solana blockchain. Why the market is down overall across the globe today. And then a good video from the chief legal officer at Ripple, Stuart Alderati, from a conference this past May talking about foreseeable risks and regulatory issues going forward with crypto. So, talking about craziness on Solana, these meme coins are like a casino, right? You can win on a slot machine, but over the long run, you typically lose. This guy made $800,000 in 1 hour after putting 8.5K into a Solana meme coin. I don't advise gambling, but if you guys do have gambling tendencies and you do it responsibly, there's a lot of fun to be had on these Solana meme coins, let me tell you that. And XRP growth is phenomenal across the board, whether it's whale addresses or whether it's wallet count. XRP's wallet count is hitting all-time highs. Addresses that are holding whale amounts of XRP, which is any amount over $500,000, are surging over the past 5 weeks. And these are the type of wallets that you want to follow. The people that already have a lot of crypto and what I would classify as smart money. They're privy to information a lot of people aren't. Interesting story here that's not really crypto related, but relevant to the financial markets and US debt. This lady spent 10 years trying to get Freedom of Information Act requests, basically trying to get private documents about this $1 trillion platinum coin. And essentially, this was discussed. They show that a large denomination platinum coin was indeed discussed at the highest levels of the government. There's a huge caveat. She gets 4 separate documents from 2013 all the way to 2023. Half of it's completely redacted, but the first memo, notice the title, Authority of the Secretary of the Treasury to issue a large denomination platinum coin. So what an interesting way to pay off the debt. Think about how we pay our debt right now. We just print money digitally and pay the interest. So why not just print one big coin and call the debt equal? That'd be pretty crazy. Probably not going to happen. Interesting Twitter thread here about the SEC XRP settlement and why this lady thinks that there won't be a crazy pump. She makes some good points. I hate to be the one to say it, but I don't think the final Ripple SEC Torres verdict will do anything for XRP. She gives 3 reasons. It simply details on how Ripple will be punished for the few minor indiscretions committed. We already have regulatory clarity that XRP itself is not a cryptocurrency, and I think that was the really big piece of news coming from this lawsuit. All the new details that will be coming from the lawsuit are just how Ripple will get punished. The point at which clarity was decided would have been the time to see it move upward in a big way. It did not. Institutions only needed to hear it was legal now to buy, hold, and use. That happened. They don't need to hear if or when Ripple will be punished for a few early sales of XRP. I do agree a minor bump in price may happen, but this will not be a moonshot. I would probably echo those statements. So why is the market down today? There's kind of a crisis in the Japanese stock market. On August 2nd, the Japanese market faced big losses for the second trading day this month. The sell-off was triggered by the rapid strengthening of the yen by the Bank of Japan and the sell-off in stocks in the US. As you can see right here, the Dow Jones Industrial Average, not the best day in the stock market. For more than a year, Japanese stocks have recorded a series of rallies driven by the depreciation of the local yen currency and strong corporate earnings. The return of modest inflation and improvements in corporate governance also contributed. And they go on to talk about how the tech stocks have had a great past year in Japan and parlay that to the United States stock market where tech stocks have been absolutely ripping this year. I do think you start to see a correction in that. And it has to do with interest rate hikes as well. I want to play this clip from Coach JV talking about interest rate hikes. And they actually play the clip where Powell talks about it and break it down after that.
The Federal Reserve holding rates steady while Fed Chair Jerome Powell points to the possibility of a rate cut in September. Let's get to Yahoo Finance's Jennifer Schonberger with the details. Of course, you and your peers there in the press room pressing him on when that rate cut was going to happen, if it would be in September. What was your takeaway from being in the room?
Hey, Julia, he was pretty forthcoming considering the statement. He, of course, didn't say that the Fed has made any decisions about future meetings at this juncture, but that the time is growing closer for the Fed to begin cutting rates, and that September is a point of more confidence for the Fed. Take a listen.
Okay, so we're going to listen to what he said, but remember, if you followed my previous videos, you guys know we need to watch the job markets. Okay, we need to watch the job markets cooling, right? Remember the 40-hour work week? They're saying, oh, it's going phenomenal, but they added a bunch of governmental jobs, guys. The work week went down from like 40 hours down to 32 hours. We're coming out of a post-pandemic economy, so that's why it grew so much. But now we're seeing the normalization of the post-pandemic. So if we see the job markets, when those reports come out, go down, they're most likely going to lower rates in September.
The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
Okay, so that's pretty simple. I mean, let's just walk through.
So I want to play that clip just because it's about Powell talking about interest rates. I talked about in my previous video. You're going to see something like this, a correction in the stock market after the Fed pivots. Right after the Fed pivots, everyone's always bullish, but that's not how it goes. Look at Fed pivoting their interest rates in the past, and you'll see that the market correction happens after the Fed does pivot. So even if there's a crash leading up to the Fed's pivot later this month, beginning of September, and then also again in December, you're going to see some negative action in the market. But you should look at that as an opportunity. It's a dip, and as long as you're in the market for the long haul, these dips are opportunities. I want to bring you back to this article of the SBI Holdings, one of the biggest banks in East Asia. The CEO talking about every bank in Japan will use Ripple by the year 2025. And he quote tweets a tweet from April 29th from Brad Garlinghouse talking about Ripple's new announcement with Ripple, Hashkey Group, and SBI Group ushering in XRPL powered solutions, starting with supply chain finance. So in this press release, they say Hashkey, which is the group Ripple partnered with, achieved significant success with its blockchain-powered supply chain finance solutions. They have widespread adoption in China. The solution was launched in July 2019. Currently has more than 4,000 companies registered, including 23 banks and 4,300 suppliers. The total trade amount recorded exceeds $7 billion, with finance transactions nearing $3 billion USD within the solution. So that's a pretty crazy fee. $3 billion in USD out of that $7 billion was transactions. So you can think about how XRP and Ripple and the low transaction fee would benefit them. And then just goes on to talk more about this partnership. But SBI Holdings, keep in mind, their CEO, not me, is the one saying in 2025 every bank will be using XRP, which is a pretty crazy thing to say. Another thing to keep on your radars too, the Ripple CEO and CTO are set to speak in Tokyo, Japan this September at XRPL Community Day. And speaking of executives at Ripple, I want to play you this video of Stuart Alderati, head Ripple lawyer, talking about risk and regulatory clarity going forward in the market.
We are joined by Stuart Alderati, Chief Legal Officer at Ripple. Welcome, Stuart.
Thank you for having me.
We will be discussing regulating crypto assets. Where are we now with the crypto assets regulation, and how do you assess the different regulatory approaches to blockchain technology taken by the US, the EU, and the UK?
I think we're seeing great progress within the past year and a half in terms of policymakers all over the world finally realizing that the crypto economy is here to stay. It's an innovation that is not going to go away. And rather than try to ignore it or regulate it out of existence, we need to create clear regulatory frameworks where the innovation can grow, but also at the same time where we can protect consumers, protect the integrity of the market, and to the best we can, keep bad actors out. But there's a couple of approaches. There's the approach that the EU has been following, adopting MiCA, which is a comprehensive set of regulations that would span the entire 27 states of the European Union. Obviously, we need to get to level 2 rulemaking at the individual state level, but it is a place where those operating in the business of crypto or the crypto economy can approach a region, understands what the laws, the rules, and the regulations are, subject themselves to regulatory supervision, and conduct their business. We've seen that approach in Singapore with the Monetary Authority of Singapore, their licensing framework. We've seen it in the UAE. We've seen it in the UK through the FCA. We've seen it in other regions throughout the world where, again, moving to a licensing framework where we have clear rules and regulations that will be followed under the supervision of a regulator. In the US, unfortunately, we're falling behind. Usually in the past, when it comes to innovation, technology, entrepreneurship, the US has been a leader. But in this economy, the US has fallen behind. They've taken an approach where they have tried to create regulations through enforcement. It's called regulation by enforcement. But before you can enforce, you need to enforce rules. You need to understand what those rules are. Without clear rules, if you're going to try to enforce in the absence of rules, you're going to create chaos. Good regulation, consistently applied, should lead to predictable results, not unpredictable results. In the US, unfortunately, for the past many years, we've been siding on the side of regulation by enforcement rather than adopting clear regulatory rules and a framework. That's changing. And it's changing, I think, rapidly, although the legislative process still takes some time. Just this week in the United States, the House of Representatives voted in a bipartisan fashion, meaning both the Republicans with support of the Democrats, in favor of a crypto market structure bill, which recognizes crypto and the business around crypto as a legitimate business, and again, creates guardrails that will protect consumers, protect the integrity of the market, and as best we can, keep bad actors out. And the fact that that bill has finally made it to the floor of Congress, has been supported by both Republicans and Democrats. It still has a journey to go. It has to go to the Senate and eventually to the president's desk, I think is a very pivotal moment in the U.S. approach to crypto. But again, I think the U.S. is playing catch up now to the U.K., to the EU, to the UAE, and jurisdictions like Singapore.
So in this context of rapid technological advancement, how can these regulatory frameworks keep pace with innovation without stifling it? And what is the role Europe should play in spearheading effective regulation?
So I think when it comes to regulating new technology, it's important that you don't regulate the technology because policymakers will never move as quickly as the technology is developing, and policymakers will never fully understand the technology. So I think it's important to look at the activity and the outcomes of the application of the technology. And what are the risks of the activity and the outcomes of the application of the technology? And that's what we should be regulating. Same risk, same regulatory outcomes. So again, if you're dealing with crypto, you have crypto intermediaries, you have crypto innovators, you have crypto software developers. What are they doing? What's the risk that they are creating? And how do we solve for the risks through policymaking rather than trying to get into the technology itself and regulate the technology?
And speaking of the frameworks, what are the most significant gaps and challenges that still need to be addressed in the regulation of digital assets and blockchain technology to ensure both innovation and consumer protection? Well,
we're still in early days. So I think we need to get the basic building blocks still built. Again, even in the EU with MiCA, once it's adopted, we still have the member states need to get to the level 2 rulemaking. So I still think we need the fundamental building blocks. beyond the fundamental building blocks, there are some very complicated issues that need to be solved for. If you're dealing with any decentralized blockchain technology, you have to balance the interest of privacy against the interest of supervision. How do you do that in a world where many transactions, at least on the blockchain, are pseudo-anonymous? How do you keep bad actors out and still allow the technology to operate? How do you deal with issues of taxes and the applications of the tax laws to these new technology? I think all of those issues need to be solved for, but first we need the building blocks of a basic set of laws, rules, and regulations. Once we have that, and we're making great progress in, again, those jurisdictions we've talked about, the EU, the UK, the UAE, Singapore, Japan, I can name a few more. Once we get those basic building blocks, then I think we can start solving for these more complicated issues.
As you very well know, there are many ongoing legal challenges faced by cryptocurrency companies. Do you believe, and you have answered this already a little, do you believe a regulatory approach based on clear rules is more effective than one based on enforcement actions? And what are the implications of each approach?
Well, I think you can anticipate my answer to that clear rules are clearly favored over regulation by enforcement. But that's just not an opinion. I think the facts have proven out that the regulation by enforcement agenda or strategy has failed. If you look at the damage caused by the FTXs of the world and some of the other bad actors in the space, I think that happened not because there was too much regulation, that happened because there was too little regulation, and it forced those actors to offshore places where perhaps the regulation was not as rigorous as it should have been. So rather than inviting these actors in, putting them through the scrutiny of disciplined regulation, but appropriately measured regulation, where we can monitor bad actors from good actors, protect consumers, protect the integrity of the market, keep bad actors out. In the absence of regulation, we actually breed the opportunity for harm to consumers. And regulation by enforcement, at least in the US, which has been used as a substitute for rational policy making, it's been through that, under that umbrella of regulation by enforcement, that this parade of horribles has happened. I think that is now washed out of the system, and those left standing again are looking to embrace rational regulation and work in cooperation with their supervisors.